Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Volatility ripped through the major currencies as flight to safety lifted the US dollar after the US-Israel military action against Iran, which dragged the Aussie briefly down to the lows of 70 cents before rebounding and recapturing the 71-cent handle. From the initial upward move, Friday's surprise of the US Producer Price Index, the PPI, added to inflation debate, strengthening the US Federal Reserve's view that the path back to its 2% goal remains bumpy, keeping policy restrictive and pausing an expected further rate cut that was viewed in the next month or two. So with that, and looking at the current price action, I still feel there's a bull trap up towards that 71.5, and no doubt any pullback will again find demand from the lows of 70 cents and reassess if the market is challenged there, as the technicals are still somewhat buckled from the recent price action. Turning to the euro, the market is still somewhat sluggish, as the market still has potential to fall towards a lower range of 117, given the fact that the recent strength of the dollar and also the uncertainty of the stronger US inflation data. Let's see how the market plays to the start of this week. The dollar yen price action, well, we're bumped up above that level, which was at 156, and still a little bit nervous, I feel, from trading around that region in case of a bull trap. And if so, could see a sharp downturn towards the region somewhere of 152 to 154 and reassess. Sterling outlook, well, the market is still somewhat weak and likely to play a further downward move towards the region of 133.80 this week. Reassess from there just in case we get a bounce. But the market is still portraying that pattern that is a bit of a downtrend. And let's see if the downside is reached before any further assessments for recovery. So with the Middle East escalation continuing, no doubt there'll be further demand for safe haven currency as we look towards its objective, which is 5,500, and reassess from there. Could even see 6,000 for this year, given the uncertainty. With the technicals remaining bullish, let's see how it unfolds into this week. And wrapping up with oil, the market is still likely to fill this gap, which is seen back towards the region of 67.25. I still feel the market is a little bit overextended, and this breakaway rally, could it be an exhaustion pattern and see that pull back? Well, that's about it. Thank you for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new week.